Hello and welcome to a brand new show of Market Makers. My guest on this edition of Market Makers is someone who has seen many bull and bear market cycles. He's got a unique style of investment. He believes in identifying mega trends and is an avid learner. Ramesh Damani, member BSc. Mr. Damani, what a delight to have you back on ETNR. Thank you for joining us.
Nikunj, always a pleasure. Thank you for inviting me.
If I look around, I'm getting a sense that there's a feeling of carnival. There is hope, there is hype, there is excitement, and there is this fun factor about markets. But my question to you is that when there is too much of optimism, that normally is bad news.
It is. It tends to be at the extreme, But there's an old saying that "Jab jago, jab savera." I think one of my brokerage firms uses that, and I think people have not woken up to this extraordinary event that's going on. We're already, I think, 1 year into this bull market, and typically bull markets have a lot of time to go in terms of years to go, in terms of points to go. So people are getting vertigo just seeing the index from 16,000 to 26,000. There's a Chinese phrase that I can paraphrase for you, which used to say that the best time to invest, perhaps in the Indian bull market, was last year, the lows in 2013 when the index was 16,000. But the second best time to invest is now. Wake up. I mean, the coffee is strong, there's lots of optimism ahead, and there are a lot of people who are bullish early in a bull market. The trick always, Nikunj, is to stay bullish as the bull market ages on. The way this game is played, and it's never failed me, I've seen many a bull market in India and overseas, is that at the top, there will always be signs flashing yellow and red. You have to take into account those signs at that time. There'll be leverage, there'll be a lot of back slumping, bad quarter shares will go up, IPOs will list, lots of signs come out there. We are nowhere near that. I mean, we've hardly raised any money in the IPO market. There's very little outstanding position. Volumes are still fairly decent. So there is reason for optimism, and I think the market is rewarding that correctly.
Ramesh, so I'm going to take the clock back exactly a year ago when you said it was a good time to invest into stock markets. Valuations were on your side. And your famous quote was that good news and good prices, they rarely come together. Right now, news is good, but our price is also good.
Nikunj, typically bull markets move in three phases. The man who decided this was a guy called Joe Granville, and unhappily, he passed away just last week at 91. So he's been a market historian in America, a guy who could move the Dow many times, and he classified these markets in three phases. 3 phases of a bull market and 3 phases of a bear market. And by my reckoning, we're at the second phase of the bull market. The first phase was clearly last year when everything was so depressed. The second phase, stocks doubled and tripled in the first phase. We may not get that kind of appreciation in the second phase, but typically you look for cyclicals, you look for good technical chart patterns, you look for good ideas. So while prices are high, they're not high enough to warrant, not buying stocks. I mean, yes, the earnings will catch up, the economy will start growing. So all the fundamentals will catch up with these companies. But, if you're going to wait for a correction, you may never get a chance, So my sense is it's never too late to go look for high quality companies and buy them.
Now, everyone on the street, at least the optimistic lot, is drawing a parallel, and they are of the view that this will be a bull market on the lines of the 2003 to 2007 bull market which we saw. Are you with the crowd?
Every bull market is different. The leadership is, different in the bull market, and it's still too early to tell.
In terms of magnitude, in terms of appreciation?
It'd probably be bigger. I think each bull market is bigger than the preceding bull market. It creates more wealth, creates more opportunities. I'm more excited. I'm not going to see too many more bull markets in my life. Perhaps it's the last bull market that I will see because I'm now an aging bull. But, I think it will be extraordinary opportunity to create wealth, extraordinary to create money. Bull markets are like, an eclipse in nature. They're miraculous things. If you get it right, it changes the course of your life, changes the course of the country, changes the course of an industry. Look at what the technology industry was prior to 2000 and what became after the bull market. Look at some of the cement companies before the Harshad Mehta bull market and after the bull market. Look at the amount of wealth the players in the last years created, the market capitalization has soared. So bull markets are to be taken very reverently with a lot of fervor. They are not to be dismissed. It's not a matter of the index going up 100 points or 200 points. It is a life-altering event. And in my humble opinion, it's still not too late to get into the bull market. Just because it has gone up from 17,000 to 26,000 doesn't mean that the market has vertigo. The technicals, the underlying strength of the market, the breadth, the leadership, everything is intact. Everything suggests that it will head higher. Will it have corrections? Of course it will. I mean, that is the nature of it. It goes hand in hand with a market. It will have periodic corrections, and some of them will be very brutal. But all the indicators that I study, all the economic data we see, suggests far higher prices from now.
Ramesh, so if I look at the market behavior, the tilt of the market action is once again concentrated in and around pharma, IT and select consumer names. Even though the basic bedrock of this bull market is that Indian economy is on a mend, interest rates will come down, investment cycle will start. But as of now, the market positioning is very different.
Well, the fundamental, you always have to try and understand what causes the bull market. What is the thing that started this configuration of a bull market? I think what has started this bull market is that there's severe under-ownership of Indian equity, right? The trouble is that Indian public went wild with gold or real estate and just ignored equities. Equity ownership is at historical lows. Go through any shareholder list and the names are family and friends. Basically people concentrated in a square mile around Dalal Street or Delhi perhaps, nothing else. That is now being redressed, and there's good reason. I think A, because stocks are cheap, B, they're tax-free, and the dividends are tax-free. So people finally got to understand the logic of that business. Now look at the names that are participating: tech, pharma, FMCG. Not only are they globally, protected against rupee going wild, so your inflation is protecting your assets out there. These companies don't dilute their equity. So if you want to come and buy now from under ownership, you want to go owner ownership, only the PE will expand. And that is what is playing out here. Companies that are diluting the equity, like we saw, for example, recently with Jayaprakash, raised issues, sold issues in the market's hammering them back to shape. But people are building a great business, respecting the equity, looking at for growth, will get a premium. And I think the premium will not only stay at this point, in fact, it will expand over the next few years. Because, a company like Lever has just done a big buyback. They got less than what they wanted at, say, 600 rupees. And probably the market took it down to 550. How is that rational? I mean, you could have sold and tendered any amount you wanted at 600, everything would be accepted. And yet, a month later, the market thought it was worth only 540. It's not rational behavior. I think investors are now coming to the senses that the good Indian businesses, the good Indian companies that will not dilute the equity will now, for the foreseeable future, get a premium PE from the markets.
So for the moment, according to you, in consumer names or in pharma names or IT stocks, there is no froth. Even though they're trading at lofty P multiples, the P multiples are justified?
They're not going to come down. They're just not going to come down. There is, there are 5,000 stocks that trade in the BSE. They never get tired of trumpeting. But there are basically 500 companies that you can really look at. Maybe 1,000 if you really stretch it. So there are only so few good quality companies. Companies that don't need equity, don't dilute the equity, don't take a substantial amount of debts, are even rarer, all right? So the good businesses, you hang on to them for dear life. I was asked in an interview, was I going to tender my liver? And I said no, because I needed a comparable investment. Just to make the 50 rupees that would fall after this thing was not a good enough reason to, because it's hard to believe that Lever's better days are still not ahead of it. As you get this millions of people get into the consumer class, as we get the whole new boom coming in India, the company Lever and the products that we make will continue to do well, as will other companies. I'm not saying Lever is a monopoly on the good times. There'll be lots of consumer companies that will do well. So, it's lofty valuations, it's nosebleed valuation, but, you learn to take that. And, of course, in my particular case, for people who invested early on, there's a huge margin of safety. So, we are happy to stick to it.
Ramesh, everyone is not an expert like you, and some of our viewers who would be watching the show, they need a little bit of hand-holding. How should one participate in this kind of a bull market?
I think first get invested. If you don't have the time to pick stocks, you're too busy, you're preoccupied, whatever. I think what Buffett has said is the best advice, is buy an ETF that tracks the Sensex to the Nifty. It's low cost. If the Sensex, as some people say, will go to 40,000, say, the ETF will mirror it. You'll make 50% of money even from this stage on with very zero cost and no issue about it. If you can devote time to it, and if you're young in India, I would suggest you devote time to it in India. It's very easy to see. There's a coming boom in e-commerce in India, Nikunj. We're going to have 20 crore people with smartphones. You go back to see any country, how that has revolutionized business. In America, 11% of sales are with e-commerce. So even there's huge opportunity. So you could buy either the frontline companies, which are not cheap. You look at a Just Dial, you look at InfoEdge, you look at a Snapdeal valuation, Flipkart. They're not cheap. They're trading at very lofty valuations. Business without great moats in them. But you look at who all, like they say in a mining boom, you want to buy the shovel and the pickaxe company, not necessarily the guy digging for gold. So look at the logistics player, the media player. How are you going to do e-commerce business by advertising in the media, right? Packaging, data, all these will explode. And there's some great selections across the board. This is just a starting point. I mean, you could be bullish on construction as I am. I think we're on the tip of one of the great construction booms in Indian history. And that's going to unfold in the next 1, 2, 3 years. So it's now around the corner in market parlance. So there are lots of ways to skin this cat. You could buy, the classic defenses if you want, the Glaxos, the levers, But if you're young, you probably want to shoot for a higher rate of return. So my sense is look at something in e-commerce, look at something in the construction business, media. I've been very bullish on that. And some of the companies, as you know, have broken out of the pack. The earnings are coming through. Their advertising is growing. So, there are lots of opportunities. I mean, I have no monopoly on ideas, and I think a lot of people have different ideas. But it's a good idea to start looking, scratching your head, put pen and pencil together. And if you're young in India, put some money into equities. Once you put it in, you'll realize the almost miraculous part of a bull market, how it transforms you from, a saver to an investor and a wealthier one for that.
You were an early entrant in GATI. You bought it when there was virtual panic on the street. Even long-term investors were throwing that stock. Now the same guys are back and they're actively accumulating GATI. Do you think a business like GATI has a long way to go? Because as of now, it's hope. There are no real numbers.
They have, I think if you look at the e-commerce part, if you break it out, they've done a couple of things that are very correct. They've gotten a Japanese major to take care of their basic business. KWE and GATI have now tied up. If you look at the e-commerce business, it's growing at 10% per month. That business will scale up over time. So it's up 6x, since a year ago. So it's had a dizzying run. Is it cheap? No. But you look at it the other way. Flip the question around. There are going to be 20 crore smartphone users in India. Maybe they order 5 packages a day and 5 packages a year. That's 100 crore packages. I don't think GATI is at 1 crore right now. So there's a lot of opportunity. There'll be other. We also own TCI, we also own Bamalor, we own a lot of these other companies. So we don't know who will pick the race. Blue Dart may win the race. In fact, they're putting huge amounts of money into e-commerce rate. But, there is a logistics boom coming. I mean, whether business does well, e-commerce does well, whatever happens, logistics will do well. So it's a place you want to start investing in.
The challenge for some of the logistics companies could be that in order to grow, they may end up diluting. Is that a risk for them?
It is a risk. I think these companies require, large amounts of capital. In Blue Dart case, the parent DHL is giving it to them. Yes, they require the balance sheets are not yet strong enough. GATI has raised some money through, QIPs in the past or through fund infusion from KWE, but they will require large amounts of capital to grow.
How should one participate in this data opportunity? Because for the moment, everyone has the data and no one knows how to analyze that data. 10 years ago, you were trying to understand the internet. Now the internet is trying to understand you.
Yeah, good point. It's data is actually a secular opportunity, and the opportunity is digitization. I think as we move from an analog world to digital world, whether it's in photography, whether it's in the stock market, whether it's in telecom, everything is ultimately stored in data as 0 and 1. Okay, so we are playing out the digitization theme in consumer electronics. We are playing it out in the media. We are playing it out in actual storage, cameras, whatever you have. It's a huge mega trend that has been driving markets for the last 10, 20 years, and we're catching it in different snippets out there. But there are two parts to the data equation. The first is that what we stored last year in data, 2014, the single year data, what globally we stored in data, was what we'd accumulated every year since Jesus Christ was born till 2013. So what we did in those 2,000 millennium years, you did in 1 year, basically. That's the rate data is growing. So the first obvious play I figured out a couple of years ago was to buy the data storage companies, which were in America actually, Western Digital and Seagate. Those were the only two guys making hard drives, and these stocks have done fabulously well, and I think they'll continue to do well. But say you're in India and you're saying, people want to digitize their paperwork or people want to digitize their photographs. So cloud will be a big business. The two companies that I think participate from it, one is Tata Communications, which I happen to own, and the company is called Ricoh. Ricoh India, it's a Japanese major, which also has a cloud business, has a data business, has a lot of hardware. So we own both these companies as proxies for, the big boom in data that we see.
For the longest time, you've been making a point that, look, this is a consumption-led bull market. And the interesting part here is that before investment sentiment has actually revived or business sentiment has revived, consumer sentiment has already revived. Air traffic growth, auto sales numbers, same store sales, they are picking up. How should one read into the consumer behavior?
I think they believe what the Prime Minister said, the Achhe Din, and they are putting their money where their thought process is, which is good. I think it's nice to have a consumer-led society in India. People who want housing, people who want a better quality of life, and that's the promise of India. I mean, we don't want to go back to the Fabian socialist days of the 1950s where we shrunk an even shorter pie. We want the pie to grow and the people expect it to grow. I think both will go hand in hand. I think as interest rates start coming down, you'll see the investment cycle spur. As FDI comes in, the investment cycle will spur, which will again spur the consumption cycle. See, it looks all around like, a great bull market is ahead. And I want to emphasize the point that if I bought a stock that went up, it's not because I picked a stock or some astute stock picking. It's a rising tide that's lifting the boats. It's the magic of a bull market at work. And people need to appreciate that. It's not the handiwork of some sitting backroom operator in Dalal Street, or it's the magic of a bull market that's unfolding. And once you understand that, I think you're much more comfortable holding stocks, because there will be always stocks that are manipulated by penny operators or by unscrupulous elements. But the broad market moves because there's something fundamental going on in the organs of India, the Indian economy, and that's what the point where I tell you.
The cycle is changing, and I guess the sooner we realize it, the better it is.
That's capitalism. The bull markets will always happen. Even this bull market will end. All bull markets end. Bull markets always end badly. We know all of that. But that doesn't mean you don't live. I mean, bull markets are fine. And I'm telling you by the history of this game, when the bear market draws closer, there will be enough indications. At that time, I'll come on television and tell you, and Rakesh will come and tell you, and everyone will come and tell you, and people will laugh at us and they say, oh, they're just talking nonsense, market's still going higher, or he's short, that's why he's saying that, But if you go back and rewind the interviews a year back, I've seen everyone was bullish. All the smart money I know in Dalal Street turned bullish. So, it's a matter of months here and there. So, I think sometimes you just need to, have faith.
You've been very bullish on NBCC, and I remember this was your Murat pick in 2012. It was at 135 rupees, low volume stock. When you told me, it took me 2 minutes to realize there is a company called NBCC, which is a PSU company. I looked at the closing price yesterday, 500 rupees. Are you still bullish on NBCC?
It brings a smile to my face. So it's good. Yes, I am. The company is called National Building Construction Company. The middle word is C. And I think there's a huge construction boom just about on the edge that we are unfolding in the company. I own a quite amount of equity, so that's my public disclosure. But here's the thing. Here's the bullish case for NBCC. They have an order book that at the last balance sheet stood at 18 to 20,000 crores. Okay, I can see by March, if I just add up the projects in Tyagraz Nagar, Subhash Nagar, in Delhi, Mehroli, Air India, Waqf Board, all these projects that are on the stages of closure, the order could be from 18,000 crores to 50,000 crores in the next 6 months to 1 year. All right, this for a company that last year did turnover 4,500 crores. So you have it's like you've done 1 crore of the business, but you got 100 crores of the order book behind you, and this is all cost plus business. So there's no risk inherent in the business. If they do 50,000 crores, they probably make 10% of that, so 5,000 crores. So you have visibility for the next 5 years. And this will only grow if Mr. Modi decides to the Prime Minister decides to do some smart cities. If he decides to build some new highway or some business corridor. A lot of the business, as you said, comes to NBCC because, it's a government company. So I think they're, well situated. They run very ably by a very good managing director who's very ambitious. So, we feel that though it has a run, its best days are still ahead.
They just got a Navratna status as well.
They did. That also helps. So that means they will do a bit more freely for projects. See, this country woefully lacks in infrastructure. That's the whole thing Modi's been saying. What is Modi's solution Prime Minister Modi's solution to India's problem? To make a China model, better infrastructure, better business, facilitate, okay? So almost anything he does impacts them. And this stock was, as you pointed out, trading last Diwali at cash value. It had 1,000 crores cash in its balance sheet. It was trading at a market cap of 1,000 crores. So that's how cheap stocks had become. But just because it's quintuple doesn't mean it's got expensive. It's still, you look at what the company's order book is and what it can be, the revenue, say 3 years down the road. There could be some pretty good numbers.
So if you're bullish on construction, are you also bullish on cement?
Cement is, something that I've never traditionally been bullish on, but the more I think about it, the more we're on the verge of a construction boom. And there's a statistic that I read from Bill Gates' blog, believe it or not.
Bill Gates on cement.
Bill Gates he was quoting a guy whom I forget about the cement industry, quoting that book called Materials, and I happened to read that book. And the statistic he said was absolutely, as you said, life-altering sometimes. He said America in its 200 years of independence, through all the national highways they built, all the infrastructure they've built, the stadiums they built, consumed 4 gigatons of cement. Let's use that as a quantity of cement, 4 gigatons of cement in its 150, 200-year history of independence, or prior to independence. China, in 4 years, consumed 6 gigatons. That's the kind of rollout that has happened. Now, if India gets on a similar drive, we have 330 million tons. I mean, you've got a huge ways to go. So, the more I understand, say, of NBCC's order book, or more I understand the projects that want to be done, linking rivers together, building highways together, whatever, I realize that, you want to buy, you want to have some exposure to cement, because that could actually be a serious up move in price and offtake.
For the longest time, you've been an IT bull, and we've argued on various forums, on various, every time we've interacted on various forums. My question to you is that, why are you bullish on IT? Because IT is more like a mature business. These companies cannot grow at historical run rates. So why are you still bullish on IT?
They protect you, against declining rupee, and that has proved its play out there. These are global businesses. The world goes to Saudi Arabia for oil, they come to tech for India. So the businesses, the one part that has been disappointing with portfolio is the mid-cap technology companies. They've actually badly underperformed the market. The TCS and all have run away and have done very well. But the mid-tier has, been underperforming. I'm still not giving up on them. We just, I've 30 years in the market have taught me a lot of patience, Nikunj, So I'm going to be, watching them. I think the fundamentals are still good. I think they will get traction the next 6 months, 1 year, I hope. But
so you're happy to own Geometric?
I still own Geometric. I own Polaris. I own Emphasis. So I own, almost across the basket, those stocks. They have been underperforming, but, I can't sell them at these valuations. They still seem attractive to me.
What's gone wrong with United Spirits? I look at the numbers and my jaws they dropped. A huge write-off of nearly 4,000 crore. Do you think there is an issue with the balance sheet, or Diageo has not been able to understand the business, or the fact that what complication they have acquired?
I think the point you hit the nail on the head. I think there are two problems. One, it's an overcrowded trade. I think it had become the most fancy trade in the market, and the common phrase was that it doubles in 3 years. Okay, so everyone moved into that for position because the market was still low, and that seemed like a sure bet. Never happens in the stock market. I think Diageo also needs to come to grips with dealing in India. I think anecdotally from what I listened back to the company is that they're having problems in the sales system, that they're not being able to incentivize the dealers properly. So that will take some time and some cleaning up before they get to grips with the company. So my sense is, while I still own a large chunk of it in my portfolio, that it's probably going to be a stock that will underperform for me.
You've been in this market for 30 years. Which is one stock which you've been owning from last 15 years and you have plans to own it for another 15 years?
Oh, I have so many stocks. That Sundaram Finance, I bought it in 2001-2, maybe at a split adjusted price of maybe 60 rupees, it's 1,000. So it's gone a 15x in say 15 years. Nothing great. If you look at the compounding, it's nothing great. But it's still at some 7,000-8,000 crore market cap, and financial services will be huge in India. And I think they will compound at 18-20%. Impeccable management. For a finance company, because if you can believe that, they've not diluted the equity in 40 years. They've not diluted the equity. They've grown organically. So it's impeccable balance sheet, impeccable pedigree management. As you know, I'm recently been a father-in-law. Happy to gift it to my daughter-in-law and tell her to keep that. If
you have to make a basket of 2 or 3 stocks, which could be the core holding of the Damani family, what would you like to buy in that basket?
Well, a lot of them are already bought, Nikunj, to be honest with you. The bargains are available in a bear market. I think you have to understand that. And it's very terrible to buy. It's the hardest thing to do to buy in a bear market. Every day you buy, the stock goes lower. Okay, but that's when you buy. So, among the stocks that I have exposure to are, of course, the Godrej Group. I have a lot of exposure to Godrej Property, which has again been underperforming, but I think it'll do well. Godrej Industries, Godrej Consumer. The liquor basket, as you know, I'm very bullish generally on. They've done very well for me. They're underperforming now. They've done very well for me. And a lot of media stocks I have, because I think it's very underappreciated in India media. But generally I have a very diversified basket of stocks. I don't necessarily, I think the top 10 stocks might be 50-60% of my portfolio, and then I have a lot of stocks below that. But, I'm happy. That's the way I view the market. So, I think businesses will do well in India. We are discovering capitalism, and India is a growing country with, growing incomes. So, it'll tend to do well.
Your simplicity, your market understanding, and the way you break it up for our viewer always surprises me. It's always a delight to interact with you.
Thank you, Nikunj. It's always a pleasure to be on your show, and thank you.
That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.